Good morning, everyone. It's 8:01 a.m. Chicago time on the 23rd of November, 2016. It is Wednesday morning, the day before Thanksgiving here in the U.S. Just a reminder, today is a normal trading day across equities and futures. However, tomorrow equities are closed. The futures close at noon Central, 1 Eastern. And on Friday, they close at 12:15 Central, 1:15 Eastern. Equities are closed on Friday. This Friday is also Black Friday, and then on Monday, Cyber Monday. So a lot of retail information is likely to come through. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Some of the key elements from yesterday, of course, is the Dow Jones closed above 19,000 for the first time ever. Um, and um, and that's a record. The market's really um, responding well to the fact that the election's behind us and the fact that the an interest rate hike is priced in. Um, Today there are a few uh, key releases coming out. But also overnight, some PMI data came out. Europe's PMI beats comes in at 54.1, basically stating that the European economy is growing at its fastest pace this year. And then on top of that, what else is material here? We just got, sorry, I have to fiddle with these screens. We just got the FHFA housing price index zero point 0.6 versus zero point 0.6 in line. And also don't forget the dollar index is trading at 13-year highs, 13 and a half year highs. The dollar index is at 101.50, the highest level since March 2003. Durable goods orders came in a lot stronger, 4.8 versus 1.7, and initial claims came in just slightly weaker, 251,000 versus 250,000, and continuing claims also came in slightly weaker at 2.04 million versus 2.01. As far as what's on deck in front of us here today, we have at 15 minutes after the open at 9:45 Eastern, we have U.S. manufacturing PMI prelim for November expecting 53.5. At 10, we have new home sales for October of 590,000 units. And then also at 10 Eastern, we have University of Michigan confidence, the final number of 91.6 expected. That's November. And then we have crude oil today, gasoline and distillate inventories. Crude oil inventories expected at plus 250,000. Distillate inventories expected at negative 1 million barrels. And gasoline inventories plus 1 million barrels. Um, and we're getting at 2 o'clock, we're getting the Fed release, the FOMC minutes. At that point, I expect the market to be really at a grind as folks head out. This is one of the busiest travel days of the year. People hit the road as early as they can. Anyway, there's so we have 8:45 release, 9 o'clock, couple of releases, crude oil at 10:30, Baker Hughes at 1 Eastern, and FOMC minutes um, at 2 Eastern. Let's switch gears and look at what we expected yesterday. Here's the primary hypothesis from yesterday. The expectation was for a choppy open right there, and then we expected it to come down into the prior day's range, push into the upper high volume node, turn around and push through the overnight high. It all Hypo 1 played out pretty good, except that we actually pushed through to the LVN, the low volume node here, which I should have pointed out as a strong potential once we get into the prior day's range. Um, We broke the overnight low by a couple ticks, and then we pushed up high, and we stopped just short of the overnight high. And so that's the hypo that played out. The secondary hypo was to open, push higher, find sellers just above the overnight high, rotate back down, and target that LVN from the prior day at 2192.25 or so. Here's what actually happened. There it is, the chop on the open. Took a long time to get out of this really, really tight range, approximately 3 to 4 points. I think it's about 3 points from high to low. And then it started to execute hypo one. Nice little pause here at the prior day's high. Remember, we're trading around the 2200. The opening price, this little dot, green dots, are the opening price. That was right on the century figure of 2200. But it was really odd. It came down to the prior day's high at 2196.50 and put in just a ton of volume. It actually moved the point of control from up here to down here. You can see that by just drawing a profile. So here's what the profile looked like at first. So let's do volume shading. Here's what it looked like, and then as we shifted down, look at all that volume that comes in at this prior day high, and it shifts the point of control down, and it just holds it there until later in the session. And then on the way back, we add to that same price, which was a setup for the mid short right in here. So we had a mid prior high. We had confluence here of mid prior day's high VWAP, and then on top of it we had a low volume node right there with the IB behind it. So that set everything up. And the expectation is it might push to the IB low, and then rotate down, and then still get stuck in the prior day. But ultimately, the plan here for Hypo 1 is to dip down and push back out. And that's basically what it did. It consolidated, pushed down, it pushed the overnight low through, and then it pushed all the way up. 2203 was the overnight high, and it got to 2202.75. Okay, so that's what we had yesterday. Hypo 1 in control. What we have overnight is another session where we have a fairly relatively low volume. Yesterday's volume was also pretty low, 1.06. The Monday session had 1.04, both lower than 1.1 million. We would expect, and the market simply sat sideways for most of the session. It started to move a little bit. With the European Open right here. But for the Asian session, it just sat sideways, tested up, and then we had the same thing as yesterday. So, well, yesterday we had it rallying throughout the Asian session and then falling off. It wasn't yesterday, it was the day before. It was Sunday night where we just went sideways and then we dropped on the European Open. And now we have our continuation move lower. So this is looking weak coming into the session. Inventory on volume is short. Overnight inventory is short, and on price it is short. So the expectation is, since we are inside of the prior day's range and just outside of value, this value is not truly valid. We expect, because of the overnight inventory, we expect a return or an attempt to push higher into the prior day's point of control. Okay, I know it's a lot of information. So let's summarize this. Notice, by the way, the composite profile, which isn't starting where it's supposed to. The composite profile for this profile right here has very distinct high volume, low volume areas. Like it's incredible. I haven't done anything to modify this profile or smooth it or anything, but it's just the market has done this thing where it pushes, it has rotated to form that high volume node. So for example, we have a push through, we have compression, balance, imbalance, balance, and then an imbalance in a gap up, small balance right here, imbalance, small balance in there, imbalance down, small balance, and so on and so forth. Gap up, push lower, chop around for balance a little bit, imbalance right here, and then balance right behind it, and so on and so forth. Yesterday was imbalanced both ways. It pushed straight down, consolidated in the middle, and then pushed straight up. But if you look at this profile here, you notice that the market is very methodically pushing higher and higher and higher. This is long-term OTF action in play, and overall the trend is clearly a one-time framing up. You could see it right here, right? Since election night, it has been a channel going straight up and pushing right into the 2200, and so it is pretty much clear what's in check, what's happening here. This is like the Santa Claus rally in true form, but in this action here, we're likely to get a rotation that cleans this up a little bit, and the market's not ready for that currently. The market's still processing news into the Fed for December, and all the news and tweets and noise generated by the new executive branch of government here, the Trump campaign. So this is what we have as far as what we're expecting for today. Let's extend this profile forward. There we go. There we're building another high volume node. Okay. As far as what we're expecting for today, the expectation this morning is we're opening near lows. I would expect us to chop around. This is inside of the prior day's range, so chop is probably most likely. I expect us to chop around. I expect a responsive move. So this morning, it's likely to look choppy, attempt lower, responsive, pullback, and then push into the 2200, 22 and a half point of control. And then it's likely to chop around in here for the rest of the session. I expect it to get fairly quiet, fairly early, as I said, because of the Thanksgiving holiday and the travel season right now. But this is what I'm expecting for Hypo 1. I'm expecting responsive. Hypo 2, respond early, find your sellers. It's not likely, and then start pushing down, looking for a test of 2190 early. So that's the first target if you are short, a pullback, and then attempt lower and push back in, and then chop around in the middle and end up in the middle on Hypo 2 as opposed to new highs. We're not able to stay. We stayed above the 2200 yesterday, but we've been poking and falling and poking and falling overnight. I expect it to continue this way. That's pretty much it for today for this session. Tomorrow there is no trader bite. It's a holiday, and nor will there be one on Friday. I'll be traveling. I'll catch you again on Monday. Stage 5 traders, we will not have our AMA tomorrow again because of the holiday. We'll pick it back up next Thursday, and hopefully you've gathered something from this. Good luck, and I'll catch you Monday, and have a great holiday if you're observing it. Take care.